What's up, everybody? This is Thursday's episode of the Mailbag, where we take questions and answer them for our Twitter followers and anybody who wants to ask questions about trading, psychology, and what's going on in the Sang Lucci world. I am Lucci, and this right here is the professor, a.k.a. Charles Bethgate.
Yes, sir.
So, a lot of things are happening right now in the HFT world. I mean, as you guys have undoubtedly been looking on your Twitter feeds. Mostly right now, it's still the market structure guys that are really talking about this stuff, you know. And then you have the Michael Lewis book campaign. They're on every network now. Fox Business, they were on this morning.
He hit the spots, man.
Yeah,
I mean, he was on, like, what was it? Let's not,
CNBC.
no, the really hilarious stuff there.
Stewart.
Stewart, yeah, he's on Jon Stewart.
Stewart.
Yeah.
Stewart.
Yeah.
Yeah, he was on Stewart,
Yeah.
and and they really dumbed it down too on that show, and that was actually really funny. It was actually
Funny, but they really dumbed it down.
Definitely
Which I get
dumbed it
because that's not a finance driven.
Absolutely. So he was on Fox Business this morning, and just from the outburst that happened on CNBC that we all enjoyed and all promoted through our Twitter. Everybody's looking for ratings, obviously, so that's going to be the first thing that they
know what they're doing.
they want to go after and everything. And then I don't know if you guys saw, but O'Brien hopped up on Twitter and then really just talked down his performance during that whole debate on CNBC. He was just like, listen, I got passionate, blah, blah, blah. I'm defending my business here and all that kind of stuff. So
actually, it's kind of funny, too. He missed, it was like 1 through 6, right, tweets. And he had them all numbered, and he misnumbered them. He left out number 3. So all these people were hitting him up, being like,
yo,
where's number 3? Like, I'm confused. And he was like, I misnumbered it. I'm sorry. And just made like this awkward situation out of what was already awkward.
And it's like people really, after that, like people just really threw him in that bucket. You know what I mean?
I think they saw him trying to make like a political move there when they were like, dude, come on. Like, I saw people saying some aggressive shit to him on Twitter. So he's probably shut down his Twitter at this point.
Yeah.
Not looking at it.
Right? Yeah. All right, so we actually have a decent amount of questions here. So let's start going through them. We have a bunch on Twitter. We got a bunch here, that was sent to the Mailbag account. So let's just start scrolling through these things. These are actually some really good questions. We got one from Ben Jackson here. What was the edge your prop firm had off of the uptick rule? I've heard you allude to it, but I don't follow how they gained an advantage. Okay, so this is going to be a really cool lesson for all of you guys. I'm gonna pop open a little notepad here and give you guys a little lesson here in how this actually worked. Okay, so what happened is back before the uptick rule got scrapped, if you wanted to get short, you needed somebody to buy you out. And it had to take place on the uptick. So let's say, let's say you're trading X, Y, and Z stock, right? And the bid is, $21.50, okay? And let's say the bid was for 1,000 shares, all right? So if you wanted to get short, you had to get picked off on an offer at the uptick, whatever the uptick was, which in this case would be 21.51, okay? So you could not get short straight on the bid. Like, you couldn't just do what we do today and say, all right, I want to get short and smoke out this 1,000 share bid. You couldn't do that. You have to sit there and wait on the offer for somebody to pick you off, all right? So this was a real sort of hindrance. Is that a word?
Yeah.
That's a word?
Hindrance.
Hindrance.
Oh, yeah, hindrance.
Hindrance towards people getting short. Now, check this out. If there was dumb money out there that still had a significant amount of capital. So let's say you were a mutual fund or an institution, and you wanted to short heavily a illiquid stock. Okay. Now remember, we try to do this on illiquid stock. So let me paint this picture for you. All right. Let's say the bid. Let's say the bid on the book was pretty light. So the next bid was maybe 100 shares, and the next one was maybe 100 shares here, and the next one was 21 for, let's say, another 100 shares, and let's say the next bid down here was like 20.50, okay, for 100 shares. All right. So if somebody wanted to get short, let's say a large short order came into the market for 10,000 shares, okay? Now, they were coded to sit on the uptick, all right? It was a program that basically stepped down their offer to the uptick, okay? So let me show you guys in detail here. Let's say you had a tool that could bypass the uptick rule, right? Where I could short the bid. Okay, let's say you just had this tool. We'll call it, I don't know, the
Smasher.
The Smasher. We'll call it the Smasher, right? I take the Smasher and I short 1,000 shares. Remember, nobody else can do this. Okay, there's only certain people who have access to the Smasher. All right, so I take this whole bid at 1,000 shares. Okay, and then I take this bid for 100 shares at 21.25. Okay, this short, if he was real, has to step down to 26. Okay, now let's say I use the Smasher again. I smash out this 100 shares. The short now has to step to 21.11 for 10,000 shares. Okay, let's say I use the Smasher again. All right, and I keep smacking this thing down. Short has to step down to 21.01. Let's say I take this last 100 shares here. Short has to step down to $20.51. What have I done? What have I done? I have taken 1,000. Let's add all this up: 1,000, 1,100, 12, 13, 1,400 shares. I've shorted the piss out of this. I've worked it down a point, and then all I'm going to do is cover right into the short. All right. So now the next print that you see is me covering this 1,200. What is it? 1,400 shares. Okay, right into the short. So now all of a sudden you're going to see this guy decrement down to, what is that? 8,600 shares. Okay. So I've manufactured a point essentially in profits. Obviously, my average is going to be a little bit lower because I sold 21.5, 21.25, 21.10, 21, and 20.5. Okay, so my average is probably going to be down to, I don't know, 21.25 or something. So I've effectively gotten 1,400 shares short at 21.25, and I covered right here at 20.51. Okay, and I did that all myself. I just beat the crap out of this thing. Okay, that's what the edge was, okay? So picture tons of firms all over the country doing this, okay? This is exactly what they were doing, right? So they had baskets of stocks coded to find out where there were big shorts in illiquid names. Illiquid names like AZO or, I don't know, names that trade like 100,000 shares or less a day, right? You'd have a big short that came in, and this was a person who was essentially stupid. Essentially stupid, but they had a crap load of money.
Right. They just weren't thinking about it.
So it's just all it was a program that was like, get me short, and it was stuck on the uptick. So every time somebody sold the stock, the short would come down to whatever the uptick was. So imagine if you had this tool to manipulate a stock lower, essentially just beat the shit out of it and cover into the short. Right? So it was a way to manufacture profits here. All right?
And imagine
really
if you have an entire firm.
Right.
This is one guy. Imagine an entire firm just piling in and driving the thing down. The guy puts his short order out for 21.51, and by the time it gets filled, it's like 18.
This guy who comes in with that short order, he thinks he's going to get a half decent fill. Meanwhile, he gets filled 2 points lower than what he expected. It took them a while to figure out they were getting screwed on this, but that's what prop trading is. You find an edge, you juice it until it's done, and then it goes away.
And what's funny about this? I remember talking about this, and this is an example of there's other things that have happened like this. And I remember talking to you about it, being like, well, why didn't you guys try and fly under the radar, and kind of just only take a little bit, so that way people wouldn't discover you, whatever. And Lucci's like. What? It's like traders. It's you beat it down as much as you can, as fast as you can, and then you find the next thing. It's not in the mentality.
And think about how many people had. There were a lot of people that had access to this tool. It wasn't just us. So anytime you had this big 10,000 or 20,000 share stepper, the whole office was in this thing. And you know what else would end up happening is that if there was too many people in the office that got shares, then we would all cover into that same offer. The whole office would have more than that offer. And remember, there was nothing behind it.
Oh,
so we ended up shooting ourselves in the foot, and then you would just throw pizza at the person who sold early, right? Because he screwed everybody else up.
Fucking blew it. There's always that one guy that's like
right?
that one guy.
It'd be like it was fucking him, man. It was him.
It's like when everybody's, you know, in middle school and the teacher leaves, everyone's like, all right, we're going to cheat on this test, all right, but nobody fuck it up. And then someone comes back in and like, miss, you know, this happened, and they're like, you're going to get your ass kicked. After recess, you fucking blew it.
All right, so, I mean, that was your little spiel there on the uptick rule. And again, this rule got scrapped in 2007, so, you know, you couldn't do any of this. Like, this thing ceased to exist after 2007.
And, you know, and that's one of the reasons, guys, that, you know, Lucci kept trading, and there was guys that we've talked about this before, that people who were making, you know, thousands and thousands of dollars, you know, sometimes a day or a week, they were dependent on this. They couldn't evolve, right? Yeah. And so they couldn't keep trading.
Yeah.
And, you know, that's one of the things that's big for Lucci, is he's been able to just always and just keep evolving and trade more in traditional ways, just like momentum trading, instead of relying on that. So
right. All right. So now we got Senthil here. Senthil is a member of our chat rooms. He's also taking the comprehensive course that we sell.
Yeah, boy.
How to prepare for the Google split trade. All right. So there was a lot of confusion on this split here. There was a whole lot of confusion on this, even from our side. Okay. What happened was they didn't really open up the options chains for it, and nobody was really trading this stuff. You know, you see the volumes are really, really light. I was even trading one of the options here. Okay, and all the options are going to be. It's just going to be one name here. So it's not like Goog and Goog-L are going to have separate options. When you pull up Google, or even if you pull up, let's say, Goog-L, you're still going to get the same chain, all right? You're going to get the same exact chain, all right? So it's only one that's going to be optional, all right? So it's kind of like the Berkshire Hathaway thing. You know, you get the A shares and the B shares, one with voting rights and one not. So the only real options chain or whatever that you really have to focus on is this one right here. I'm still kind of waiting for the volume to come back on this thing. It took a while. It took like 3 hours for it to come back. But after it did, and you know, there was plenty of people trading it, it looked okay to me. The spreads were unusually wide, though, unusually wide, and I think that's because of the decreased volume here. So it's going to take a couple of days. It's going to take a couple of days to figure out the tape. It's a brand new stock now, guys. It is a brand new stock. You know, so you really have to watch the tape, find out what the changes are. She ripped 20 points off the open and then came all the way back and went negative, you know. So be careful. Be careful right now. Take it slow on the Google. All right? You got to work this thing. You got to figure it out first.
You want to jump into that one too, since that's Google too.
Okay. Neo's saying, I know these questions are a rare instance, but I have a put side credit spread on Google from yesterday. Thinkorswim has told me that my spread strikes are based on the sum of Goog and Goog-L until I close out. I'm having a lot of trouble because liquidity is dried up, and I have no idea where I could roll out of this thing. Absolutely. Yeah. So this is one of the big problems. One of our other boys had this issue too. You know, they had puts overnight, and then obviously, as you can see, I mean, he's having the same issue. I mean, with the widespread and the illiquidity, it's like, well, what the hell do I do? You know, I would say, Neo, you know, just be patient, and if you have a put spread, you have a put side credit spread, okay? So right now, I mean, the tape on the high flyers is pretty weak, but you saw that rally at the end of the day. I mean, I think you're good. Just hang out. Just hang out for a little bit. See the action tomorrow. Nothing's changing as far as your P&L. You know what I mean? It's just you have different numbers that you're just not used to seeing. All right? So calm down. Tomorrow morning, everything will be fine. You know, it's not like you're going to, you know, lose everything you got here. All right? What else we got? Okay, so let's go back up here. We got The Economist again.
He's asked some
We got The Economist again.
In the past.
Hi, friends. I really admire you putting each day your true P&L. Please continue doing it. I really don't understand how I see if you're long or short. Okay. Please explain the blue and the red data, blah, 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 all that kind of stuff. And second, what is the software you use for showing the P&L? Yeah, we've had a lot of issues with this, actually. You know, people look at this P&L, they're like, what the hell am I even looking at? So, yeah, it's worth it. It's worth it for us to go over this thing real quick, all right? So let's take a look at this P&L here. It's just for everybody that wants to try to understand it. We are going to be showing this account number. Is that okay? Is that? I mean, it's gonna show.
Can you take a screenshot and show? Can you go
to
a password?
No. You know what? I got it.
Yeah, go to a password.
I got it.
I'm like,
take.
You want to broadcast the password? Pop up Google Docs.
All right, hold on, guys, hold on.
Yeah, just pull it around.
No. I got this one for today. Okay, here we go. All right, so I have the P&L for today. This is the sheet that I just throw out on Twitter and everything. So let's share this thing. Is this it?
Yeah.
Yeah, Windows.
Yeah, P&L. Yeah, P&L.
Okay. All right. Okay, so here we go. So how do you read this thing? Okay, notice I have it set to buys and sell. The reason why is that I want you guys to see me moving in and out of these things. I mean, if I put net here, you wouldn't really get as much data, okay? So the first thing you want to do is really look to where, the options are correlated here. The buys and sells are correlated. So let's say I'm taking a look at this Netflix put, this 355 option. I want to look at the buys too, okay? So I want to look at, okay, how much did he buy and how much did he sell, all right? So you're basically looking at the prices that I bought, the prices that I sold, all right, and then you're going to end up, with a little computation here and an eventual P&L. Okay, so when you're looking at the reds, these are all sells. Everything in parentheses is a sell, but it's correlated to a buy order as well. Okay, and that's why over here you're going to see the total P&L on that particular trade, whether it was in a profit or whether it was in a loss. Okay. And this one right here, this one was nasty. It was absolutely nasty. This is where I lost most of my money today. All right, I drained a bunch in this thing. Okay, and remember, I bought it back here for about 24 grand. So my total loss here was about 30 grand. It was about like $31,000 here. Okay, where I made on the Priceline calls, you'll notice the ones that I wrote. Okay, I ended up making a significant amount of money on these calls that I wrote. Okay, so you'll see here 23 grand. I think there was another one here. Here we go, 22 grand. All right, and then they correlate with the buy orders, which are down here at 24.5. So you're looking at this P&L and this P&L. You subtract the two, and then you get the total P&L for the day. So I made 20 grand on this particular option, and you see this sell is correlated with this buy. So you subtract these two, and you get about 13 grand on this one. I mean, I could show the net P&L. It would probably be easier to read for everybody, but you don't really see the action. I want you guys to see the action. I want you guys to see, like, if I'm squirming all day, like, I want you guys to see that, or if I'm like, I want you guys to see all the options that I'm in and all the buy and sell orders. So you really have to take a look at this and match up the buy and sell orders and see if it's a plus or a negative. Okay.
Hold on. I just want to make because I almost just got turned around. If it's a parentheses, that means that you lost money.
Yes, absolutely. And over here, if it's a parentheses,
yeah. And then if it's red, that means that you were short.
Yes.
Correct? Yes. And if it's blue, that means you were long. If it's outside of parentheses, that means you made money.
Yes.
Correct? Okay. I was like, I didn't even think I was following that for a second.
Yes. Absolutely.
I was like, I've been reading these things wrong for 2 years. Are you kidding me?
Yeah. So I basically just worked out. I mean, this put right here that I sold, I thought Priceline was going to level off all day, and she tanked. She tanked in my face, and I ended up losing 30 grand on the put side and making like what? Making like 40 grand on the call side. Where I should have dropped the puts earlier. Much earlier, stomached a smaller loss, and then I would have ended up with a nice $40,000-$50,000 day. So that was the mistake that I made today. All right. So hopefully, thank you, I appreciate that. All right. So hopefully that helps you guys out. Does he have another one?
Yeah. There's a couple pieces here. Well, so he's sort of asking, he or she is asking, can you show your percentage gains for the last months and the last years? And, can you do it daily, weekly, monthly? And we now can.
We can?
Actually.
Oh, we can do
legally,
that?
we can do that.
Oh, shit.
Here's the thing, guys. So we just switched the structure of our fund so that we are allowed to engage in what is called general solicitation, which means we're allowed to essentially advertise, the fund. This is a whole new thing for hedge funds, right? And everyone's like kind of scared to like walk out. Like it's like crossing the street. Everyone's like, I want to see someone go first because I think a bus is about to come hit this guy.
Same thing with the HFT debate, right? It's like who's going to drop that shit first?
Yeah, who's going to drop that shit first? And so we can right now, and we actually will start doing that, in the coming months. We need to be extremely careful. We need to make sure we're doing it in the right ways, and that's just ongoing discussions with our lawyers. So, economists,
we got you covered. I mean, we're going to try to maybe we'll try to revamp it and do something else with it.
Right. Right.
And we'll see what happens. We might do it on the website. We might do it. We might do it in public.
Yeah, we got another facelift on the website coming.
And by the way, of course, we track our results daily, weekly, and monthly by percentage gains. I mean, of course, we have to do it for our investors. So absolutely. And dude, comparing yourself to us, don't get in that game, man. He's sitting here. He wants to compare to us on percentage gains, percent winning trades, percent returns. Do not get in the game of comparing yourself to somebody else. I mean, I understand you have a goal that you want to hit, and maybe you have somebody that you look up to, and it's like, okay, I want to get here and all that kind of stuff.
Right.
But don't look at these metrics as a way to define, how you're doing. At the end of the day, it's about trading. It's about the trade. Focus more on that, and all those numbers will be freaking great. They'll be great.
If you end up making 30% on your account in a year, that's phenomenal. But then, if you compare yourself to Lucci and he makes 75%, you're gonna feel like shit. Whereas in reality, that 30% for you, maybe given where you're at in your trading career, is fantastic. It's great.
Absolutely. Absolutely.
Or it could be the opposite. Lucci could lose 100%, and you could lose 50%, and you should be really bummed about losing 50% and looking at what you're doing, but you're like, oh, I'm 50% better than Lucci, so I'm doing all right. So just don't get into that game with yourself.
Indeed. All right, so we have a question from Rueda, who is our Mexican counterpart. He is also in the chat rooms.
And he'll be in True Brain.
And he'll be at the True Brain, so we'll meet him actually out in L.A.
Yep.
Very fitting for a Mexican to be in L.A., of course.
Yep.
So Netflix has dumped 100 points in the past few weeks. I've seen puts rally from 50 cents to more than $5 in a few hours. When shit is falling so fast, how much of the bid offer is because of the MMs, or do they pull out and what you see is retail trying to get in and out? Yeah. So here's. This one is an interesting question because what he's saying is that when these stocks really make these big moves, who is it that you're buying from? Who is it that you're buying and selling from? Essentially, the market maker is always going to be there. I mean, he has to be there. He has to provide liquidity, right? But there's not, it's not set in stone how he has to do it. So he's got a lot of flexibility on what he can and cannot do, right? And remember, if you're a market maker, you see all the order flows coming in, right? You see everybody trying to smack an offer, right? And you know that wave is coming before anybody else does, right? So what are you going to do if you're a market maker? You're going to pull back your liquidity as much as you can. You're going to make people have to jump a spread that they don't want to, right? Retail money is going to look at a spread and say, holy shit, 50 cents by $1.50, right? I can't get anything in between. I got to pay $1.50. Screw that. I'm not going to do it. Less people in the trade means less risk for the market maker. All right? So hence why he's going to widen that spread as much as he can. So most of the people that you're buying from after the market maker has pretty much stepped out of the way is retail. Yeah, it is retail.
Rodrigo, I did a long interview with Chaim and our boy Stritty in Chicago. I posted it's on the site. Just Google Sang Lucci market makers. The market maker obligation. If you Google that, it should come up. And what we talk about in there is that the market maker obligation has changed. In the last 10 years, what it used to be a market maker is not the same as what it is now. And a lot of the people, I was actually just heard Larry Tabb in an interview say, being a market maker now, whether you're a designated market maker or not, is sort of irrelevant, right? And so a lot of that comes from the fact that their incentives, the money that they could make after moving to decimalization, the money that a market maker could make on your normal average days decreased dramatically, right? Because the spreads were so much smaller, and that's how they make their money is the spread. So then, if they can't make, it used to be that in big moves, market makers knew they were going to get their face ripped off, but they were like, hey, I can make up for it and more with the money I make during normal days, right? But they can't really do that anymore. They can't just make up because the spread is smaller. So in these big swings, they are not going to be able to sit there and say, okay, well, I'll just take this one in the face because that's the way it is. They're just like, hey, I'm getting the fuck out of here because I can't take this. I can't take this smack in the face.
What would you do? You get the fuck out of the way.
Right. And what's interesting about that interview is Striddy is a really good trader.
Shout out to Striddy, man.
Yeah, and he's coming at things from a trader perspective. Chaim is a market maker, and it's funny, or he's coming from a former market maker's perspective, and it's funny for us to think about it like, well, market makers are people too. Because you just think of them as like Darth Vader. It's like they're the enemy, but it's like these guys got to make a living too. What are they supposed to do? Just sit there and get kicked in the nuts? They're not the government. They have mouths to feed.
Definitely. All right, so we're gonna machine gun through some of these questions here on Twitter. We got a bunch of people on Twitter asking questions. First one we got from our boy Dirty Automatic, aka Brian Weiner, aka Risk Manager, aka all that. He is asking, why does Apple suck? Apple right now is the worst stock to trade, unless you are a consolidation scalper. Okay, Apple is hands down the worst stock that you could trade. All right, and while it was going up to 700, it was awesome. It would have such a range. And after this thing just tanked all the way back down to 450, you got Icon in the mix. There's so many. You got a market where people are dumping out of high flyers. You have a lot of indecision now. It has become a shitty stock. Anybody who's looking for real alpha, do not trade Apple, please. Just stop it. Stop it. Okay, Apple right now is for market makers to just write premium to all the losers out there who still are waiting for that 100-point move and waiting for Apple to go over $600. It's gonna happen at some point, but right now it is the shittiest stock that you can trade. Okay, we got another one from Nokuma here. At Nokuma _ Sang Lucci might not be necessarily any larger than.
It's one of two.
Oh, it's one of two. Why are premiums for names like Priceline and Google so much more expensive and volatile when the percentage change in the underlying might not be necessarily any larger than the percentage swings in names like Facebook, Twitter, and all that stuff? Okay, so this again, I mean, dude, it sounds like it's simple. It's a simple answer, but dude, you're talking about a $1,400 stock. You're talking about a $1,200 stock. And for you to say that there's not that much volatility. Bro, Priceline, look at the chart on Priceline today. She moves 20 points in 20 minutes. Does Facebook do that? Does Twitter do that? Does Google even do that? Does Apple do that? When have you ever seen Apple put in a 20-point day in the last several months? Right? Priceline does that every day. So of course these options are going to be more expensive. All right? Simple answer. Okay. We got at 9-Toe Joe, which is, I mean, he's got 9 toes. Is that what it is?
I'd be kind of tight. That's actually what's up.
I mean, what's your thoughts on divergences between indexes and large moves in normal low-volume stocks such as K, Microsoft, crushing of Momo names? Absolutely. So always this is going to happen. This is called sector rotation. This is called, mutual fund money moving around into different names for different periods because of X, Y, and Z reason. We're in a situation now where money is coming out of internet stocks. Why? Maybe everybody just decided that there wasn't any more growth here, and there wasn't. These things are already so overbought. We're now going to look for growth in other names, We have a situation where the market hasn't really sold off yet, so people are still putting their money into something. They got to find something. So what has it been now? It's been Microsoft. It's been Hewlett-Packard. It's been names like IBM. It's been names like the steel names. It's been Bank of America and J.P. Morgan. It's been a lot of other names versus the go-to Pricelines, the Googles, and all the internet stocks, Facebook and Twitter. Guys, Twitter was a $72 stock at one point. Now the shit is trading $44, Imagine, you guys remember the price target of $90 that somebody put out there on Twitter? $90, and that was at the high. That was when she hit $70. Somebody put a $90 price target on it. You know, so eventually that money is going to come out of those names that are such darlings here, and even white people Chipotle, the money's going to come out of there too. You know, eventually it's going to come out of there too. Maybe not.
Maybe. I've had Chipotle 4 times this week, and the week is not over.
All right, so always money's going to come in and out. All right, now we have another question with at Chili Farmer. Apparently he farms chili.
We're learning a lot about people.
But he's got the PH in front of the, so I'm confused. You know, I'm confused. He should be a ganja farmer. You know, you got to change to, you know, growing weed now. Can you talk about how to stay consistent every day trading stocks? Too many up and down days.
Yeah, give just a minute. Just give a 1-sentence explanation.
One sentence explanation?
I'm kidding. I mean, come on, like.
I'll tell you what. You know what? You want the real answer? Consistency, when you look at it like that, it's a myth. It is a myth. Because you're looking at consistency as this this thing to aspire to get to, right? But you don't understand that there's a lot of emotions that you need to deal with just to even get there, to this place of consistency, which you believe is going to solve all your problems and all that kind of shit, right? But it's not about that. It's about every day. It's about what happens every day. Sometimes your strategy is not going to work every day because the market changes. So how are you going to be consistent in a market that's not going to pay you out? You know? So you need to come up with more tangible things like not trading. That could be, you know, that's your solution to coming up with this consistency thing, you know? People are sitting there talking about, oh, how do I make 20 grand every single day? You know, how do I do this every single day? Do you know how disciplined you have to be for that? I mean, you got to be a fucking machine. Some people can do it, and to them, I'm like, how do you even do this? At Modern Rock, you know, this guy's one of them on Twitter. This guy doesn't have that many losing days. I look at him and I'm just like, how do you even do this? You know? But for me, you know, hands down, I'll make more money in one trade than anybody, right? So I'll always come back and make it up. But his thing is consistency and making sure that every day he's taking good opportunities and he's pushing away the bad shit, you know? So that's what you got to do. Talk about more tangible things than this little, you know, this dream of consistency. The idea, you know?
Right, yeah.
So we have another one from at SKM56. I am new to the chat room. You are so transparent. Is there an ability in the near future to monitor your live portfolio? Hell no. I don't want any of you looking at the shit that I'm doing in real time. Anybody who's in the chat room, I mean, you know what I'm in. You know what I'm in. You know what's going on, okay? But, you know, let's face it. If the whole world is in my trades, that puts us all at a disadvantage, okay? Hands down, that puts us all at a disadvantage.
And you know, we harp on it a lot, but we don't do alerts, and we don't do that for a reason.
We don't do alerts.
You know?
We do not do alerts. I do not want to be responsible to send you an options alert to buy X, Y, and Z option, and you take it in the face for 50%, and then you're sitting there asking what the hell happened. You know, that's not my game. I am not in the game. I am not babysitting anybody that comes to my chat room, nor am I interested in doing it anyway. I got my own fucking problems. I got my own problems. All right. Let's take one last question.
We've already done this.
We've already done this one?
Too, so,
okay. So we got Joe Park _online at Joe Park _online. Have you ever used the online broker Loyal3.com? I've never even heard of this shit. Never even heard of this shit. What is this?
I have now.
I have now.
Whoa.
I was going to say, Joe Park, do you work for Loyal3.com?
What is this? Own what you love. You know, guys. Hold on. Let me show this. This whole page here. Okay. So investing for all, making stock ownership easy and fee-free. Okay. So this apparently is a competitor to Robinhood. Okay. So now we're getting a lot of these things coming out here. Right? They're making it appealing to
I've seen this.
The everyday person, right? Get notified about IPOs, fee-free. Oh, look at this. They even have a broker comparison chart. Look at this, right? You know what's going to happen here? And again, like, realize the technology for these places are not, you know, that great right now. I don't know if you can trade options on this platform. I highly doubt that you could trade options on this platform. But if you could and it's free, you know, again, are you going to be able to get real-time data? Are you going to get a platform? Like, I don't know. I don't know enough about this company. However, this is going to be the new standard, guys. This is the Google model. Make this shit free. Make the shit free, and it's going to force all the other brokers to do something, you know?
And guys, I don't know anything about this company, right? So I'm not disparaging them. I'm not disparaging anyone out there. But what we always say is do your research and step back and think about things, right? If you have to be aware of where you're paying your broker in some capacity, right? Because unless you're paying them some sort of membership, fee, I don't know what the new models are out there. If they're not charging you for fees, they have costs to run their business, and these are not nonprofit organizations. So payment for order flow. This is something that people do. If you read Flash Boys, if you read dark pools, we haven't talked about it nearly as much as we should have. But Scott Patterson's Dark Pools, that was the book that really set it off, all this off. And it's sort of in the moment because Flash Boys is coming out, getting overshadowed a bit. But Dark Pools by Scott Patterson, pick it up, read it. There's stuff. You just think about it and do your research, think about it, take a step back, look at it from a 30,000-foot view and say, does this make sense to me? If it does, and it works for you, do it. Do it. But make sure you do your research.
Right. And what he's saying is, again, like most retail brokers, most retail people, they don't understand the broker model. They don't understand all the back channels that they're able to make money. And the way that you're going to understand this is by starting to read some of the content that's out there right now. Flash Boys came out, but Dark Pools was the book that explained the whole shift towards electronic markets. And all the gaming that was happening it was like the birth of the electronic markets and all of that gaming that happened in between, Flash Boys is taking one story of exchange versus HFT kind of thing and giving us that story. Dark Pools was where all of it started, and you having this knowledge is going to help you make better decisions on who you broker with and, how you understand the other part of the game. Most retail guys, they don't understand other parts of the game.
Easy plug here too. If you want to learn more about it, we are going to be in LA on Saturday, April 26th. We're doing a live event where Chaim Bodek, Brian Weiner, Peter Zhang are actually going to be talking about this stuff, laying out for you. It's a private event, so you're going to have to buy access to it. But because it's private, they're going to be really kind of spilling the beans on how this stuff works and how to protect yourself from it. Lucci's going to be talking about with Dr. Andrew Menaker, Kunal from Bulls on Wall Street, and Roy about trading psychology. So it's going to be a badass event. But if you want to learn about stuff like that, and you're in LA or you want to fly into LA, it's the best way to do it.
Cool. All right, so we've already gone way over here, guys. We have tons of people hitting us up on Twitter. This is great, too. This is great. We haven't had this much interaction yet. So next Thursday when we do this again, we're going to keep track of all these questions that we missed. So the interns are going to pull it up all in a document for us, and we'll try to get it to next Thursday as well. All right, everybody. Thanks, everybody, for joining.
Thank you,
guys, all these videos are stored on YouTube for you guys to see whenever. We'll see you guys on Tuesday for the weekly, whatever the hell that is.
Peace.
Later, guys.